This is True Energy nationwide.
Hello, and welcome to TruEnergy's Closer Training Series and our module on watching the market. Now, when a lot of people think about the energy market, we think of something that's intimidating, something that's chaotic. We think of people sitting around crunching numbers, doing a complex analysis of information. We're plotting, we're reading, we're interpreting charts. Now, TruEnergy sends out a daily market update that's a summary of this information. But even this can be a little bit daunting if you don't understand the information in the material. We have terminology like storage injections, MMBTU, BCF, TCF, ATC, spot pricing versus strip pricing, the USEIA, NYMEX, and these can all be very confusing terms if you're not familiar with them. So today we're going to take a look at these market updates and understand a little better exactly how to read them. Now, when you first look at one of the daily market updates, one of the easiest places to start is with the graphs. Graphs are great because you don't have to understand the terminology, you don't have to understand the jargon to be able to get something from this. These are visual representations, and you can actually get a lot of information just from looking at these. Now, on this one in particular, we see a lot of up and down motion, we see a lot of fluctuation, but at the very end we see that right now the prices are actually dropping, they're actually going down. So at first glance we might look at this and we might say, are the prices going to continue to drop? Are they going to keep going down until they bottom out? Well, that's possible, but we look more at trends than at what is going on at any given instant. We want to see the prices for what they're doing over time. Now, one of the things we can do to see the trend a little more clearly, if we draw a line across the bottom points of this graph, we see that on a whole, it's actually going up. The prices are actually increasing over time. So, although prices are going down right now, as we look at this, we see that if the trend continues, we're about to hit another low point. So, in the next day or so, prices are probably actually going to end up spiking back up. So, what we can do is we can tell a customer this actually could be a good time to sign, because if the trend continues, we're about as low as we're going to get before we hit another spike. So graphs are a good place to start, but there's a whole lot more information within these market updates. If we look over on the left-hand side, we see that up at the top it has an early morning update. Now this is just what has happened today. This is just what has happened this morning. This doesn't include anything from yesterday. This doesn't include anything from last night. Now, right below this, there is a summary. Now, the summary is going to be what happened yesterday and today in particular, but it's also going to include a lot of information on anything that has really been happening over the past, say, couple of weeks. So we can see that it says the November 14 NYMEX natural gas contract continued its descent yesterday, losing another 9.8 cents to settle at $4.023 per MMBTU. So here's where we start running into a little bit of terminology that can be confusing. First, we had NYMEX, and then we had MMBTU. So what are these? NYMEX is actually the energy market. That is the New York Mercantile Exchange. MMBTU is million BTU. Now, it doesn't mention it right here, but there are times where you will also come across a measurement called a therm, and a therm is actually 100,000 BTU. You might also at some point come across a quad. A quad is going to be a quadrillion BTU. Now, all that's fine and good, but some of you all are probably wondering, what is a BTU? A BTU is a British thermal unit. Now, what that means essentially is if you take 1 pound of water, and 1 pound of water is roughly equivalent to about a 16-ounce bottle. If you put that in a saucepan and put that on a stove, a BTU is going to be the amount of energy it takes to raise that 1 pound of water by 1 degree Fahrenheit. That's a lot of jargon. Put a little more simply, a BTU is roughly equivalent to the amount of energy from 1 burning match. Another way of looking at it that you might hear, 1 cubic foot of natural gas, that's 1 foot by 1 foot by 1 foot, is going to yield roughly 1,000 BTU. Now, it's going to vary a little bit depending on conditions, purity. Likewise, 1,000 cubic feet, that's 1,000 of those little 1 cubic foot blocks. That's going to yield approximately 1 MMBTU, or as we said before, 1 million BTU. And you may hear usage or pricing actually by either of these measurements. You may hear references to pricing in units of MMBTU, or you may hear of pricing in regards to per 1,000 cubic feet of natural gas. And one last comparison, since we're used to hearing about energy in terms of megawatts, 1 megawatt is going to be roughly equivalent to 3.4 million BTU. Now, going back to our market update, we see that the market anticipates another large storage build to be announced by the US EIA this morning, which leads us to the question of what is a storage build? Storage is basically the available supply of natural gas, what has been produced. And when we hear of storage, we hear usually in two different ways. We hear about injections, or sometimes it's called builds, and we hear about withdrawals. An injection is going to be the amount of natural gas that's being added to the current supply, whereas on the other hand, a withdrawal is going to be the amount of natural gas being removed from the current supply. Now, when it comes to this large storage build that they're talking about, they say that estimates range from 94 to 112 BCF, with consensus formed around 107 BCF injection. We just talked about what injection was, but what is BCF? So BCF stands for billion cubic feet. And you might also come across references sometimes to what's called TCF. TCF is trillion cubic feet. Back to the report, it says this would be bearish compared to last year's 99 BCF injection for the corresponding week, as well as the 85 BCF 5-year average. Now, when it says that would be bearish, this is a reference to what is called a bear market. There are bear markets and there are also bull markets. Now, a bear market is when prices are decreasing or when storage is actually going up. By contrast, a bull market is going to be when prices are increasing or when storage is actually going down. So when it says it's going to be bearish compared to the corresponding week from last year, what this means is actually that storage is up from this exact same week on the calendar from last year. So the report goes on to say that the EIA is still projecting a 3,477 BCF end of October storage level, but that most analysts see the injection season running into November with a final number above 3.5 TCF. So what this is saying is that at the end of October, the storage level, or the available natural gas, is going to be at 3,477 BCF. However, most analysts predict that they're still going to be injecting or adding to the supply even into November, and that by the time it's all said and done, they're going to be at about 3.5 TCF, or 3.5 trillion cubic feet. But this does still leave us with one question. What is the EIA? This is a term that we saw earlier. The EIA is the Energy Information Administration. They deal with all the oversight of the energy matters throughout the United States. Back to the update. It says that the steady improvement to storage inventories is expected to keep downward pressure on gas prices. Basically, as the storage keeps going up, prices are going to continue to go down. But any indication of the increased demand brought on by early cold weather champions the bulls. Bulls, remember, that's the bull market, so as increased demand from cold weather, prices are going to go up. So there are always going to be some factors that imply a bull market, and there are going to be some factors that imply a bear market. And our market update is going to actually summarize that up in the upper right. We have the factors for each of the markets and what actually comes into play as far as the variables. Now that we've gone through the summary, there's something in this graph that might look a little odd. If we look at where prices are currently, at the very end of this graph, it shows the pricing is right about, say, $3.95. However, in the summary, it had said the gas settled today at $4.02 per MMBTU. So what's the difference here? The difference is, as you look on the graph shows that it's a 12-month strip price. And this is going to get into the difference between strip pricing versus spot pricing. Spot pricing is the energy cost at any given moment, right at that 1 second. Strip pricing, on the other hand, is going to be an average energy cost projected for a given window of time. In this case, it was 12 months. So the pricing right now might be a little over $4 per MMBTU. But if we take into account the averages over the entire next year, the price is going to be about $3.95. Now, moving a little further down the market update, we have another set of graphs. And these are a little bit similar to the previous one we looked at as far as the trends in pricing. This one says it's in the last 2 weeks. So if we look at the last one in just a window of the last 2 weeks, we can see that there's been a overall increase in pricing, but that it peaked a couple of days ago and that we're now starting to drop just a little bit. Now, as far as the actual pricing on this says that it's ATC power pricing. So what is ATC? ATC stands for Available Transfer Capability. And this is going to be a measure of all the transfer capability for the transmission network for any commercial activity. And it is basically calculated from the total transfer capability. That's everything they have. Subtract a margin for the variation, any variables that could affect this. Subtract again anything that's reserved or anything that's already accounted for, and you have what is available. This is the available transfer capabilities. Moving over to the graphs on the right, we have next day on peak power. And this is going to be measured in dollars per megawatt hour. So when we see that ERCOT, for example, is $41.80, remember that that's also 4.18 cents per kilowatt hour. Below that, we move from electricity back into natural gas. We see that this is the NYMEX natural gas pricing. For November 14, again, this is going to be a strip pricing, but it's going to be just for the 1 month of November. That it's going to close at $4.023 per MMBTU. Now, where it shows the change, that's basically saying that it's gone down. The average has gone down 9.8 cents over the past year. And below that, we have December pricing. We have a 12-month strip pricing. Then we get into the calendar year for 2015 and the calendar year for 2016, done the same way. At the bottom of the graph, we have the gas storage reports. Now, this is the storage we were talking about earlier of everything that has actually been produced that is available. So we can see that this week it's 29.88, whereas last week it was only 28.91. Below that, it shows the difference. We have the same thing next to that. This time last year it was at 33.73, so we're actually down a little bit from that. And then the 5-year average is 34.14. We're actually down a little bit more when we look at a 5-year average. That's important because although they talked about record builds, we're adding more to it than we normally do, but our levels are still lower than normal. Now, the last thing we have on the market update are the weather charts. And these aren't going to show you actual temperatures. What it's going to show you is how far off of average we are. So if we look at, for example, let's look at Ohio. Days 1 through 5, Ohio is about average. However, when we get to about 6 to 10 days out, Ohio is actually going to be about 3 degrees below normal, -3. We go a little further than that, we go to days 11 through 15, it's actually going to get a little bit colder. Ohio is actually about 5 degrees below normal. So this means that as the temperature goes down, again, the demand goes up, pricing goes up. Now, whether you're using this information for yourself or whether you're passing it on to clients, maybe you're going to email them a copy of the market update, the important thing to keep in mind is this is not a crystal ball. These are all the variables that we have to take into consideration. These are the factors that are actually going to help us predict what the market's going to do, but the market's always going to have a little bit of volatility in it. So at this point, it's going to come down to you as an account manager. Be informed, inform your customers. Go sell something.